Hello everyone, good morning, good evening, good afternoon. I hope all of you are doing good. This is the weekly market update live stream, and if you are new to my YouTube channel, please make sure to subscribe to it and please make sure to like the live stream. Also, if you're not following me on Twitter, 𝗟𝘅𝗿𝗲, this is my Twitter handle. Please make sure to follow on Twitter as well. And finally, if you would like to receive more organized updates and calls, you can always join in the Discord server. The link you can find in the description of this video. And by the way, I just started posting some really good tweets on my Twitter account. I mean, mostly related to trading strategies, backtesting and stuff. So yeah, um, you know, just go to the Sherlock Whale handle and give me a follow on Twitter as well. So if you guys have any questions, any chat requests, you can always drop in the chat box. So let's start the live stream. And first of all, let's start with the Bitcoin chart. So Bitcoin right now is trading at 86.4K. And, I'm speaking from my personal experience. Never ever try to take a long position or build a long position going into FOMC. Just a few days ago, I was looking at the stats and I was surprised to see that uh, on average, Bitcoin's price has declined by almost 2.5% on average after each FOMC, right? Rate cuts or no rate cuts or pause, despite any of the outcomes, on average price on the Bitcoin chart after the first 48 hours on average has decreased by 2.5% during the last 5 to 6 years. So you can imagine that, building a long position going into FOMC, it's always a risky idea. And someone just mentioned the trade for AERO, Arrow. That trade we closed break even. So we had a long position on Arrow. Then we had a short position on Arrow. We had to close both of those positions at break even because obviously I did not want to continue with the positions, and even I had to cancel my Bitcoin short position also. That was not a great decision. Probably we should have just kept that short position open, but I was expecting a bigger move towards 93.5K, so I thought it would be a good idea. Ultimately, the idea was to definitely build a short position. Okay, going into FOMC, the idea was to build a short position because it was expected, obviously, with 97 to 98% probability that there is going to be no change with interest rates, which is definitely not bullish. uh, and even if it was priced in already during his press conference, Fed did talk about inflation, did talk about the uncertain situation. So for that reason, I was already expecting a move towards downside. And even if you would take a look at the Bitcoin chart also, you would realize that there is a massive deviation above this $90,000 resistance level. And because of this deviation, we placed a short position at this level. We had to cancel the limits for the short position just because of FOMC. Otherwise, that short position was a really good idea. In fact, in some of my updates also, I did explain that, why exactly I believe price should be going down, or why exactly I believe there is going to be some sell off at this level. Obviously, because there is a deviation above this resistance. So back on Friday, 23rd of January, if you guys remember, we had this failed breakout above $90,000 level, which obviously resulted in a lot many people trying to take long positions at the $90,000 level. So it was very much expected that as soon as price would make a move back towards $90,000 level, all of these people who are stuck in their long positions since Friday, 23rd of January, obviously they are going to bail out, or they're going to try and bail out of these long positions. They would try to close these long positions at break even price. And as a result of it, you would see selling taking place. And again, because it's a big resistance level, because $90,000 level, I have been saying this for quite some time, that only take a long position, only build a long position once you have a 4H close above this resistance level. Same goes for altcoins as well. You have to build a long position. We have Bitcoin dominance sitting at the $4,700 resistance level. We will be talking about that part later on. But the important part is that Bitcoin also needs to support this trajectory. Bitcoin also needs to give you break above $90,000 level for you to successfully execute a long position. And so for that reason, I've been staying on the sidelines. Market has been really choppy. Price has been constantly moving in this range. You would open a short position and then Bitcoin dominance would start going down. And as a result of this, short position may not really work well. You would open a long position and then Bitcoin would start getting rejected at $90,000 resistance level. Again, your long position may not really work well. So it's a difficult situation. I would like to admit this myself that it's a difficult situation. I was just sharing the same thing in the recent update also, which I shared this morning, that it's a difficult situation to trade. This is probably the best possible environment for scalpers because they would have a very small stop loss. They can simply just execute small scalps. But for swing traders to build a long position or a short position, even in this situation, it's really tricky. I mean, I would show you later on the chart for total 2, total 3. Even if you would just take a look at the chart for some of these major altcoins like Ethereum or Solana, you would understand that most of these charts are constantly consolidating around the same price levels. So that's why it's quite difficult for you to build any swing position in these kind of situations. And I can completely understand the frustration, but we have seen this range, we have seen this kind of consolidation last year as well. Instead of just getting frustrated, instead of just opening random positions, instead of just trying to catch the right move, you can simply just wait and wait for the right trigger, I would say. So going back to the Bitcoin chart again, first of all, the last week also when we did this live stream, we were talking about the same thing, that Bitcoin needs to first of all give us a 4H close above. And by the way, this is the 8H chart that we are looking at. If I take you to the 4H chart, you can see that we did not have any close above this level. Ever since we had a break below this level, we did not have any close above the 90.5K level. And this range, it's not kind of new. You can see that uh, after, in the mid of December also, we had a break below this level. Then price had at least 5 to 6 rejections on the 4-hour chart or on the 8-hour chart, 6 to 7 rejections at this resistance level, and then in the first week of January, we had this first 4H close above this level, and then we had this rally towards 97.5K. So it's definitely not going to be easy for price to make a move towards upside. It's definitely not going to be easy for price to break above this resistance level. We have seen this range. We have seen price move in this range for at least 2 to 3 months last year as well. So it's definitely going to be difficult. But the only trigger for your long position is going to be the one in which Bitcoin will give you the 4H close above. I mean, it's relatively very simple. I need not to talk about exponential moving averages. I need not to talk about VWAP or other stuff. I need not to talk about even the higher time frame charts also. I just need to show you this 4-hour time frame chart, which is clearly telling you that price is sitting at resistance level. This was the first retest, this was the second retest, this was the third retest. We had this massive deviation above this resistance level. And obviously, whenever there is a deviation, the deviation retest would generally work. And you can see that deviation and then the deviation retest happened. The only thing that I'm just a little bit frustrated about, honestly, is that I did not execute the short position. We should have kept the limits open. We should have, just kept the limits off, just kept the limits open, and we should have gone with this Bitcoin short position. But I had to cancel the limits the last minute because of FOMC, because I thought that there is going to be some volatility and our stop loss was around 91.4K. So I thought if there is a wick, it's definitely going to hit the stop loss. So it would be better if we execute the short position after FOMC. But after FOMC, obviously, we started having this move towards downside. But yeah, the idea was definitely right. And, we are going back down to this support level. Again, remember that this support level price needs to hold. If we start breaking below this level, if we start losing 85, $84,000 level, then it can easily go back down to 78,000, which is the next support, and then ultimately down to from 78 down to 75. So these are the next two levels that we are targeting. These are the next two levels that we are looking at. The immediate resistance is 90.5K. The next support is 85K, 84K, where price exactly is sitting right now. Price has been moving in this range, by the way, since November mid. So you can imagine that it's been a painful period for the last 2 to 3 months. Price has been constantly moving in this range. But I would say that same is the case with the Bitcoin chart. Same is the case with Bitcoin dominance chart also, which has been moving in this $4,700 to $4,300 range since since 3rd of November. So it's been a painful chopping season. But the best possible trades that you would get once Bitcoin starts creating a bottom around here, and the best possible short positions you would get once Bitcoin gets rejected at this resistance level. Same is the case with Bitcoin dominance. Also, the best possible long positions you would get once Bitcoin dominance is around $4,700, and the best possible short positions you will get once Bitcoin dominance gives you a retest at $4,300 level. But it's absolutely important that Bitcoin stays above this support level, stays above $85,000 to $84,000 level. If we start breaking below this level, then the next target is going to be 78,000 and then 75,000. And by the way, I just posted a very interesting tweet which I would like to show you guys. Very interesting tweet on my Twitter account, in which the first statement is that Bitcoin is not digital gold. But the important part here is that, so basically, I am expecting another October 10th. Now, this might be a little bit surprising for some of you guys, but I am expecting another October 10th. For those of you who don't know what happened on October 10th, Bitcoin crashed from 122,000 all the way down to 102,000, probably in just one 15-minute or 30-minute candle. And then same happened with most of these other altcoins also. Every single altcoin went almost 80 to 90% down just in a matter of few minutes. So not at the same not exactly at the same extent, not as brutal as October 10th, but I'm definitely expecting something quite similar to October 10th, in which we are going to have a bigger move downside. Something that most of us are already used to of seeing, in which just in a matter of few minutes, Bitcoin price would go down, let's say down to $75,000, or we will have a break below $75,000. So Bitcoin price will go, just in a matter of few days or just in a matter of few hours, Bitcoin price will go down almost $10 to $20,000. And as a result of it, altcoins, obviously, they would start bleeding. So in this tweet, first of all, I've explained that the 90-day correlation between Bitcoin and gold just flipped to 0.34. So for all those people who have been constantly asking me that, what is my take on metals printing new all-time highs and Bitcoin constantly chopping around the same price levels, this is exactly what my take is. So the 90-day correlation between Bitcoin and gold just flipped negative 0.34, and negative 0.34, by the way, is not a normal reading. It's actually quite, I would say, a high reading. So when we say negative correlation, it basically means that the one asset it's going up and the other asset is constantly going down. And when we talk about the positive correlation, it basically means that one asset it's going up and the other asset it's following the first asset. So both of these assets, they're going up together, or both of these assets, they're going down together. This is what we usually refer to as a positive correlation between different financial assets. And obviously, when we talk about the negative correlation or the inverse correlation, it basically means that they're both moving in the opposite direction. So negative 0.34, that's actually quite high. And the correlation between Bitcoin and gold is right now sitting at negative 0.34, and this is the most negative reading since 2020. And if you guys remember what happened back in March 2020, when gold went up almost 8%, when gold pumped almost 8%, we had a 38% move downside. Obviously, at that time we had the COVID, we had a few other things happening, but at that time, Bitcoin went down almost 38% just in a matter of few days. And I've explained here that it looks quite similar to me. Gold is hitting new all-time highs at 5,100. Silver is up almost 241%, and Bitcoin is down 13%. If you would compare the data for the last 365 days, you would realize that Bitcoin is almost down 13%. At the time when I posted this tweet, Bitcoin was down almost 13%. Now it's definitely sitting at $84,000. So basically $85,000. So it basically means that Bitcoin is down almost, I would say 91. I would have to see, but yeah, almost 16 to 17% in comparison to gold and silver. So if by any chance a macro crack happens here, okay, this is very important. So let's just say that a war happens. Let's just say that we have some global pandemic. Let's just say that we have Trump announcing tariffs. Let's just say that we have some other macro crack happening in the economy, in the US economy. Then as a result of it, these traditional finance guys, okay, so I'm talking about people who invest in traditional finance, these traditional finance guys are not really going to close their gold positions, obviously, because gold works as a hedge against all of these major macroeconomic events. Whenever we have this kind of chaos in the economy, that's when gold is naturally built to move towards upside. So as a result of it, you would realize that if a major macro crack happens, obviously these leveraged traditional finance guys, they are not really going to close their gold positions, because why would they actually do so? Gold is basically working as a hedge. If a major macro crack happens, gold is actually designed to go up, right? Same is the case with silver also. Someone is asking in the chat box, what about silver? Same is the case with silver also. But what we have seen, during the last 10 years or so, is that whenever there is a major macro crack happening, whenever there is war news, whenever there is news related to tariffs, that's when gold goes up. That's when we see a major move upside in metals, which basically work as a hedge against all of these things, all of these negative things happening in terms of economy. But at the same time, Bitcoin, despite being labeled as digital gold, always takes a major hit. Okay, and it's naturally true that if you are an asset manager, and if you are holding Bitcoin in your portfolio, obviously you are holding Bitcoin just to diversify. Okay, this is where most people actually get confused about Bitcoin. They do not realize that most of these asset management institutions, but most of these other people, big companies investing in Bitcoin, they are not they are not allocating 20 to 30% of their portfolios to Bitcoin. They are actually allocating probably just 1 to 2% of their portfolios to Bitcoin, and Bitcoin would always be the first thing that they would liquidate if any major macro crack happens. And this is exactly what I've explained here, that whenever there is anything like what happened back in 2020, for example, news related to major pandemics, some bad news related to economy, that's when you would see an upside in gold, and that's when you would see a major downside in Bitcoin and other risk assets. Same goes for other risk assets also. So I've explained here that the traditional finance guys will be pulling out their margins, and they won't touch their gold. They will dump the liquid stuff. Obviously, we know that Bitcoin is far more easier to liquidate, and they will dump Bitcoin. But here is the important catch. This divergence is historically bullish for Bitcoin, just not yet. Okay, so if you would compare the timeline, you would realize that you would naturally have this question that back in March 2020, when gold went up by almost 8%, after that, after the announcement was made that COVID-19 is now a global pandemic, after that, Bitcoin went down almost 38%. But soon after that, just in a matter of few months, Bitcoin created a new all-time high in 2021. So Bitcoin would ultimately catch up, but it's definitely going to take some time. So there is definitely going to be one major liquidation event in which Bitcoin would probably go down by 30 to 40%. And then soon after that, you will see a major rally in Bitcoin. And same is the case with altcoins, because some people in the comment section are asking me about altcoins also. I'm not that optimistic about the altcoin market. That's a totally different story. But I believe that, and remember that, the altcoin market is not really going to perform well if you have Bitcoin constantly going down. This is something which I explained at the very beginning of this live stream also, that if you have Bitcoin dominance sitting at resistance, which is exactly the case right now, you have Bitcoin dominance sitting at $4,700 resistance level, but at the same time you have Bitcoin going down. No, that's not really how your long positions are going to work well. You will need support from the side of Bitcoin as well. You will need to see Bitcoin at least breaking above this $90,000 resistance level, or even if it's not breaking above this $90,000 resistance level, Bitcoin needs to consolidate and at least not go down. Because once Bitcoin starts going down, alt are naturally going to take the hit, even if Bitcoin dominance is not really doing anything much. So that's why you have to understand the correlation carefully. So the first part of this tweet is basically painting the picture or explaining the scenario that, first of all, you need to understand that this narrative being pushed that Bitcoin is digital gold, and whenever you have a major macro crack happening, whenever you have a global conflict happening, whenever you have some global pandemic or anything, people, just as they would invest into the metals, people, just as they usually invest into these precious metals, they will be investing into Bitcoin as well. At least this is what Bitcoin was made for. But that is not really the case, because we have not reached the phase of, we have not reached a stage where we have this major adoption happening, where we haven't really reached the phase where people have started accepting Bitcoin as an alternative for gold. Gold is still far more, I would say, established, far more credible in comparison to Bitcoin or crypto in general. So that's why this comparison itself is definitely not legit. This comparison itself is definitely flawed by design, in my personal opinion. As a result of it, you have seen that most of these big institutions, these hedge funds, as soon as we have a major macro crack happening, they would immediately liquidate Bitcoin. So this is the first scenario. But the important part is that, and the reason why I'm explaining all of this is because this pattern has played over and over again, back in 2020, back in 2018, back in 2016. So we have three different cycles in which metals created new all-time highs, or we had a major rally in precious metals, and soon after that, as a result of it, we had Bitcoin printing a major leg towards downside, and then soon after that we had a big rally, or at least the start of a major bull market in crypto. The same thing happened in 2016. I've just given the example here. Every time Bitcoin creates a negative correlation with gold, so this negative correlation thing, it's very important. Every time we have a high negative correlation between Bitcoin and gold, meaning that whenever we have both of these assets moving in the opposite direction, whenever we have this inverse correlation, you will always notice that, first of all, you would have a major downside move in Bitcoin. This is what I'm actually referring to, that I'm expecting another October 10th. Once again, I'm not expecting that there is going to be something something exactly similar to October 10th, meaning that I'm not expecting altcoins to go down by 80 to 90% just in a matter of few minutes or just in a matter of few hours. But there is definitely going to be a slow bleed, in which, let's suppose that Bitcoin will break below $85,000 first, then it will have another break below the $78,000 support, then it will have another break below the $75,000 support. And remember that $75,000 support is where the majority of the people, they are going to bet on Bitcoin. And if we have a break below $75,000 on Bitcoin, then most likely people are going to believe that, okay, now the bear market has started. Because in some of my previous live streams also, I've explained this thing very clearly, that even if Bitcoin breaks below this 82 to $83,000 bottom, which it created just a few just a few months ago, this last wick at $82,000 level, it's really important. This wick right here, sorry, this wick right here at 82,000, sorry, 80.6k level, this wick, it's really important. Because if Bitcoin starts consolidating, if Bitcoin starts getting accepted below this level, then as a result of it, even if we have one weekly candle close below this level, we will have USDT dominance breaking above that weekly resistance, which I have talked about over and over again in some of my previous live streams. And as a result of it, you will have something that has not happened in the last 2 to 3 years. And naturally speaking, people would have this belief that the bear market has started, because $75,000 support is actually a very important support. Even if we talk about the $82,000 level also, it's a really important level, because this is the average buying price for MicroStrategy. This is the average buying price for most of these ETFs. This is the average mining price also, if you do not have the best possible equipment. This 75 to $82,000 range, it's actually quite important. And if Bitcoin starts consolidating below this level, that's when the majority of the people, they're going to lose patience, and that's when they would start liquidating their portfolios. That is when they would start exiting Bitcoin positions. And as a result of it, you can see actually a major move downside in Bitcoin. And I wouldn't really be surprised if we get to see, just in a matter of few months, if we get to see Bitcoin sitting at $50,000 to $49,000 price levels. 50 to 49,000 if there is actually a bear market. I'm not really going to say that it's going to be a bear market or anything, but if we have a major move downside on the Bitcoin chart, then if you would ask me personally where exactly I would like to buy Bitcoin, then somewhere around $40,000 to $50,000 price levels, because I've explained this in some of my previous live streams also, that after halving, the average mining price for Bitcoin, if you have the best possible equipment available, then the average mining price is somewhere around 52,000. And during the previous cycles also, we have observed the same thing, that if Bitcoin has never really consolidated for a long period below its average mining price. Because if this thing starts to happen, then the miners, they would basically have no leverage. Then the miners, they would basically have a no advantage, no incentive to mine Bitcoin, and the whole system is basically going to collapse. And as a result of it, it's difficult for Bitcoin to continue to trade below the average mining price, or at least the lower threshold, the best possible mining price that you can get. So yeah, it's actually quite difficult. If you do not have the best possible equipment available, then the average mining price for you is going to be somewhere around, I guess, 75 to 82,000. Some people quote as high as 84, $85,000 level as well. But if you have the best possible equipment, then the lower threshold is definitely 52 to $50,000 price levels. And during the last cycle, just before this last halving, the average mining price was sitting between 15 to $25,000 price levels. And as a result of it, we saw that during the last cycle also, Bitcoin created the bottom around $15,000 level. It did not break below this $15,000 price level. I'm not saying that it cannot break below this price level. All I'm trying to say is that it cannot continue to consolidate below this level. For example, think it logically, right? From the perspective of a businessman, if you are running a business, you can continue to take the loss, let's say for 1 month, 2 month, 3 month, 4 months, 5 months, 6 months, but you just cannot continue to take the losses for years. So at some point in time, Bitcoin would have to create the bottom around the same price levels, and then it would have to rally immediately. So that's why I believe that if we have a break below $75,000 price levels, then you should definitely have the $50,000 price mark in your mind. That is when I believe we are going to have a major rally upside. I'm not really sure if that's going to be something which you can call a bear market, but probably it's just going to take 6 to 7 months. If that sounds okay, like if that sounds something logical to you guys, because I don't think 6 to 7 months would make the market uh be termed as the bear market. I would say that it's just going to be consolidation phase. If it breaks below $75,000 price level, then you should definitely have $50,000 price mark in your mind. So going back to the Bitcoin chart, I was explaining about this correlation, right? So every time Bitcoin creates a negative correlation with gold, it precedes Bitcoin's next major leg up by 4 to 6 months. So the average timeline usually is 4 to 6 months. If we have a major move downside, let's suppose we have these precious metals printing new all-time highs, then we have a major move downside. I mean, who knows? Probably this is just a start of this major move downside. We already have Bitcoin going from 89,000, 90,000 all the way down to 85,000. We still have almost a 6% move downside on the Bitcoin chart, and it's not even difficult for Bitcoin to go down by 30 to 40%. Bitcoin has done this thing quite a few times in the past, so it's actually something which I would like to believe that if these precious metals, they continue to create new all-time highs, Bitcoin at some point in time, you're going to see a major crash in Bitcoin price, and then soon after that, you will see a major leg upside. This is exactly what happened in March 2020. This is what exactly happened back in December 2016. This is exactly what happened in 2018 also. This is what exactly happened 2016, because after 2016, soon after 2016, move downside on the Bitcoin chart, we had this major rally towards upside when gold and silver eventually top out in next 3 to 6 months. So this is exactly what you have to keep an eye on. As soon as gold and silver create new all-time highs, as soon as you see gold and silver creating a top in the next 3 to 6 months, that capital needs somewhere to rotate, okay? Because it's kind of obvious that these precious metals, they just cannot continue to pump forever. At some point in time, you are going to see a major retracement in these precious metals. And why would a major retracement happens? Because obviously people would start selling at some point in time. So far this has not really happened, because maybe we have the preparations for something going on. Maybe we could have some major macroeconomic event in the next few months. I mean, who really knows, right? So that capital needs somewhere to rotate, not back to stocks. Obviously, it will not be rotating back into stocks. It will not be rotating back into bonds, into the only liquid uncorrelated asset. So, the uncorrelated assets definitely is Bitcoin at this moment, because we have equities also printing new all-time highs. We have precious metals also printing new all-time highs. But at the same time, Bitcoin is down almost 26 to 30% from its all-time high. It's down almost 13% to 16% during the last 365 days. So as a result of it, this capital will naturally rotate into the uncorrelated asset, which most likely will be forming the bottom at that point in time, which is most likely going to be considered cheap at that point, right? This is the important part. If, as soon as the metals start creating new highs, which they are already doing, by the way, as soon as we have metals, continuing to print these new all-time highs, there is naturally going to be some selling taking place in these precious metals, and then they would create this top. And as a result of it, and because we have metals creating new all-time highs, and because we have this negative correlation, Bitcoin ultimately would continue to go down. And as soon as we have metals printing new all-time highs, the capital will naturally rotate into the uncorrelated asset, which at that point would be cheap, which at that point would be considered cheap. And Bitcoin definitely is going to be cheap. I mean, if it's trading around 60,000, 50,000, even 70,000, I would say that it will be considered cheap. That will not really be considered the fair price for Bitcoin. And as a result of it, at some point in time, you're going to see a major rally upside. So Bitcoin probably is just, rinsing out the late buyers at this point in time. And remember that $75,000 price level is probably, the line in the sand for most people. Once we have price breaking below this price level, most of these people, they are definitely going to liquidate their positions. So everyone positioning for Bitcoin to catch up with metals immediately is probably playing the dumbest trade in the room. So if you are someone who is constantly buying Bitcoin, who is non-stop buying Bitcoin, thinking that we have some sort of positive correlation between Bitcoin and gold just because Bitcoin is considered digital gold, so soon after that we will have Bitcoin also catching up with, catching up with these precious metals. It will happen eventually, but it's definitely not going to happen immediately. First, we will have a major move downside, and only then we will have a big move upside. At least this is what has happened during the last three cycles. This is exactly what happened in 2016. Soon after that, in 2017, we had major move upside. This is what exactly happened in 2018 and 2020. Then we had major move upside in 2021. So for that reason, I believe that, in the simplest possible words, because we have metals printing new all-time highs, Bitcoin ultimately will have a major move downside, almost 30 to 40% move downside. And soon after that, you will see some selling taking place in these precious metals. And as a result of it, the capital will naturally start flowing into the uncorrelated asset, which is Bitcoin at this moment. And then you will see Bitcoin creating a bottom and then rallying immediately, probably by, probably something similar to what we saw happen back in, I guess, 2021 also. I mean, who really knows, right? So if you have any questions related to this, please make sure to drop in the chat box. And by the way, almost 50 plus people are watching the live stream and only 17 of you have liked it. Please make sure to like the live stream. Please make sure to subscribe to the YouTube channel. If you are not following me on Twitter, please make sure to do that. 𝗨𝗏𝗏, this is my Twitter handle. You guys can see that I have posted some really useful information on my Twitter account. I mean, this pinned tweet also is really useful. I have basically compiled a complete list of all of these different indices that you will require, that you will need to use if you are someone trading crypto actively. You don't have to look at all of these 47 indices every single day, but all these indices are really, really important. If you're confused looking at the Bitcoin chart, you could literally look at some of these positively correlated assets or indices with Bitcoin, and then you can make your decision. So yeah, make sure to go to my Twitter account and save this tweet, because this tweet is really important. By the way, I have never really seen someone post this list. I tried to search it on Google as well. I was not really able to find a single platform where this list was published. So it took me some time, but I have compiled the list of all of these major indices. If you have to understand the capital rotation also, you can use sector indices. If you have to understand macro correlation, you can use DXY, and then Bitcoin CME. chart, and same is the case with other indices also. So make sure that you are going to the Twitter account and saving this tweet, bookmark this tweet, and simply just copy all of these symbols and then create a watch list on your TradingView account. So over to you guys. If you have any questions related to this, any chart requests, then please make sure to let me know in the chat box. Okay, let's talk about Bitcoin. As I was explaining, Bitcoin needs to hold this level. Bitcoin needs to stay above $85,000 price level, because price has been consolidating in this range since November, right? If we start losing this level, and I really hope that I really hope this happens, because I would love to take some short positions. I have been waiting to take some short positions, although it's quite difficult considering that Bitcoin dominance is actually still sitting at this price level. And by the way, Bitcoin dominance is back at this trend line. It did not break below this trend line. I was hoping that we will see a break below this trend line on the Bitcoin dominance chart, but obviously this did not happen. We do not have a break below the trend line. At some point in time, this will definitely happen. And remember that this is not just a smaller time frame trend line that we're talking about. We're talking about a daily time frame trend line. So yeah, I'm expecting that there will be a big move downside on the Bitcoin chart. I mean, in the next few hours or in a day or two, and then Bitcoin dominance will start breaking below this trend line, because at some point in time, obviously, as I said before, Bitcoin dominance will have to lose this trend line. If there is an ascending trend line present on the chart, price will eventually definitely break below that ascending trend line. Sooner or later, it will definitely happen. Same is the case with descending trend line also. If you would take a look at the stable coin dominance chart, you would realize that this major move upside happened on the stable coin dominance chart, mainly because of this descending trend line. So if there is a descending trend line present on the chart, then you can expect a major move upside. If there is an ascending trend line present on the chart, then you can always expect a major move downside. If you talk about Bitcoin also, the reason why Bitcoin is giving you a big move towards downside, it's mainly because of this ascending trend line. And I have been saying this for quite some time that this is not an actual break below the trend line. And when the actual break below the trend line happens, it's definitely going to be a big break towards downside. So this is exactly what's happening right now. We are still sitting at support. There is no need to build short positions. You are already late. You should have built these short positions almost 24 hours ago, or maybe soon after FOMC. We had one short position, we cancelled it, and we had another short position open on Arrow as well. By the way, this is a little bit unfortunate, because we had one short position open on Arrow as well, but I had to close that short position also, because I did not want to take the risk. Market is definitely a little bit choppy to trade, so that's why I had to close this short position as well. But again, the good decision was at least to bail out of this long position which we had open on Arrow. So yeah, regarding Bitcoin dominance, it's still, I was explaining that it's still sitting at this major daily trend line, and just in a matter of it's just a matter of few days that Bitcoin dominance will start losing this trend line. So you just need to be a little bit patient. You just need to wait a little bit. You just need for Bitcoin to create. You just need to wait for Bitcoin to create a bottom somewhere around here. I mean, it's already trading at 84.6K, and it can actually go back down to sweep the low at 80.5K level as well, or maybe 78,000, because that's where the next support for Bitcoin is, and then the next support is at 75,000. So if you see an upside on the Bitcoin chart, and then Bitcoin dominance starts breaking below this trend line, that's going to be the best possible trade for you. And this trade is realistic in my opinion. It can definitely play out in the next few days, because alts, they're down almost 10-15% already, because of this big move downside on the Bitcoin chart, because of this big move upside on the Bitcoin dominance chart. So this trend line, it will definitely play out eventually, and it's going to give you a rally very similar to what you saw happen in the first week of January. I mean, for the first week of January, how beautiful that week was, when Bitcoin finally had a break above the $90,000 resistance level, and Bitcoin had a major move. Bitcoin dominance had this major move downside from, I guess, 3rd of January to 6th of January. In the first week of January, we had this major move downside on the Bitcoin dominance chart, and it was definitely a very good opportunity to play some good positions. Right now, I'll be honest with you, the market has been a little bit choppy, so it's difficult to open swing positions. You take a look at the Bitcoin chart. I've explained this quite a few times in the past as well. You take a look at the Bitcoin chart and then you realize that, okay, maybe you should be executing short positions because Bitcoin is sitting at resistance. But then you take a look at the Bitcoin dominance chart, which is also consolidating around resistance, and then you reach the opposite conclusion that maybe you should be paying attention to the long positions. It's been a little bit confusing situation during the last 3 to 4 months, and it's completely normal. It happens time to time, and you don't really have to get frustrated with this. You just need to wait. You just need to be a little bit patient and wait for the best possible trade instead of executing just random positions. This is what I'm trying to do. I'm not throwing out any random positions in Discord. Also, some of you have been complaining that we only had probably like 10 to 15 positions in this month, but at least we are trying to save the capital. At least we are not trying to and at least we're not trying to enter any random position. So this is what my take is about the Bitcoin dominance chart. I believe that it's 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 actually quite difficult that Bitcoin dominance will continue the move towards upside because of this massive deviation at this level. I believe that this daily candle is probably going to close somewhere around here, and then in the next few in the next one in the next 2 or 3 days, you will have Bitcoin dominance finally losing this trend line, and then you will have Bitcoin also creating the bottom. By the way, how bad that we actually canceled this short trade. That was such a beautiful short trade which we canceled. Stop loss was at 90.4k, and this was, I guess, a TP for the short position. Easily a 3 risk to reward ratio trade, but we just had to cancel it because of FOMC. But at least I'm happy that we will get some more opportunities because at least price is making a move and not just sitting around the same price levels. That's the good part. Uh, could you go into your hype limit and why you are looking to take a long at the $23 support retest and not the $28 level? Okay, so this is a good question. In Discord yesterday, I dropped the limits for hype at $24 and not at $29 to $28 support level. First of all, the support starts from $29 or 28, you can say. That's where the support for hype is. But the reason why I did not place the limits at this price level is because I'll be honest with you, as I mentioned earlier, I'm expecting a big move downside on the Bitcoin chart, and same is the case with altcoins also. So I did not want to take the risk and place the limits, although hype has been relatively strong in comparison to the rest of the altcoins in the market, but I did not want to take the risk at this support level, although it's actually a good support, although price actually has reacted at this $29 to $28 price level quite a few times in the past. You can see that the last time we had a break above this level, break above this resistance level, price came back down, gave a nice retest at this $29 to $28 support level, and then we had this move towards $36 price level. But the reason why I am placing the limit at this price level, the reason why I'm choosing to place the limits at $24 to $23 price level is first because of because of this constant worry that we may see a major move downside in the altcoin market if we have a major move downside on the Bitcoin chart, or if we have a major spike on the Bitcoin dominance chart. As a result of it, I did not want to take the risk with with this $28 to $29 support level. And secondly, if you're taking a long position here, I mean, think it from the perspective of fib levels also. You are basically entering a long position in the premium zone, and I have placed my limits not only at this support level but at the same time slightly above the 0.75 fib level. So this is where the 0.75 fib level is. And remember that it's not like this support has been retested. Price can definitely go back down to give a retest at this support level. This support also remains untested. This support also has not been tested after the breakout, which basically means that if Bitcoin starts, if hype starts making a move towards downside, there is every possibility that you may really get to see a retest of 23 to 24 23 to $24 support as well. I still believe that it will take some time. It's definitely not going to happen immediately. You can place, you can place an alert on your trading view chart somewhere around here, and only if price starts breaking below this support, then you can place the limits around $24 to $23 level, because remember that it's not really going to be easy for price to break below this level immediately. But if we have some crash, like exactly what happened back on 10th of October, in which we had price on the hype chart crashing from $43 all the way down to $20 just in a matter of 4 hours or so, then it's not impossible that you will get to see these limits filling very soon. So that's why I have placed the limits at 28 to 23. Again, first, because I did not want to place limits in the premium zone. Again, I believe that if there is a major move downside on the Bitcoin chart, altcoins are definitely going to take the hit. And finally, because of the fib levels, and then this support also has not been tested before. I wasn't really paying attention to the dynamic levels in this situation because the current market price is quite far away from where I have placed the limits. So it's definitely not realistic to take into account the positioning of the dynamic levels. By the time price gets back down to these levels, by the time price gets back down to this support level, obviously you cannot predict where the dynamic levels are going to be at that point. It may take a few months, it may take a few days, it may take a few hours, but in my personal opinion, this is where we should be placing the limits. At least we are buying something. And remember that we have a change of character. On the daily time frame chart of hype, we have this change of character, which basically means that it's a good idea to draw the fib levels because this is as of now the major swing high. So it's a good idea to draw the fib levels and then wait for price to make a move all the way down to at least 75 or 0.705. The reason why I have not placed the limit at 65 or 618 is obviously because, if I place a limit somewhere around here, that would be equivalent to placing the limits in the middle of nowhere. Like if we think it from the perspective of support level, because of this fib level is perfectly aligning with support. As a result of it, I chose to place the limits at $24 to $23 price levels. By the way, again, 40 plus people are watching the live stream, but only 23 of you have liked it. I would really appreciate if all of you would just press the like button, smash the like button, spam the like button, and then make sure to subscribe to the YouTube channel as well. Sush is asking, so I would call you Sush because I cannot really pronounce your name properly. Sush is asking, how will the gold correction be and how much could it decline during the correction? Obviously, this cannot really be predicted. Like to what extent you may see the correction on the gold chart, but I'm just trying to give you a general opinion that if there is at some point in time, there is definitely going to be a correction, right? And I see people talking a lot about metals. I see people talking a lot about the precious metals, but they forget to realize that silver is making the all-time highs. Okay, fine. But have you actually given it a thought that when was the last time that silver was trading around the same price levels? It was probably 20 years ago. Okay, so this is something that you need to pay attention to. If you're saying that all those people who invested in these precious metals, they are probably the luckiest people, then you need to understand that probably they have been holding on to their positions from the last 30 to 40 years. Same is the case with gold also. After 1980s, I guess, when gold created its all-time high, from 1980s to 2000, for the next 20 years, we saw a 77% decline in the prices of gold. We see a 77% decline in gold's price from 1980 to 2000 in the next 20 years. So if you're thinking that investing in precious metals is the right trade, then you need to think twice because you're already late, right? It's not like you would invest in precious metals today and you would be able to get a decent return tomorrow. It's not like most of you guys are trading crypto. Most of you guys are already young. Most of you guys are trading crypto. So you are basically used to of seeing the returns, the immediate returns. You are basically used to of seeing 2x, 3x returns. I mean, we're talking about a generation which trades meme coins that can actually go up 100x just in a matter of few hours. And you're talking about investing in gold. So you need to first take a look at the chart of gold from 1980s to 2025 and then start talking about gold because this is not the right investment for you. You need to first look at the chart. Even if you are someone who actively invests in Bitcoin, you need to think twice. You look at the returns on the Bitcoin chart during the last 10 years and look at the returns on the gold chart during the last 10 years. So gold is definitely going to be the slow trade, and the correction that I'm talking about back in 1980s, created the all-time highs. Then in the next 20 years, we had a brutal correction. So I'm saying that at some point in time, because it's already in the uncharted territory, right? We don't really know if there is going to be a major macro crack or not. I mean, gold may just continue to go up for the next 3 to 4 months, but at some point in time, you're going to see a major correction, and that correction may last for the next 20 years. I mean, who really knows? This is what exactly happened the last time as well. So, once we have a major correction happening on the gold chart, and why exactly this correction will happen? Because people who are already in profit. Gold is trading around its all time high. Gold continues to create all time highs. So, no matter what price you invested at in gold, you would definitely be sitting in profit because it's trading around the all time highs. So, it would be natural for you to take some profits off your positions. And when that happens, definitely you will see a pullback, a correction on the gold chart. And as soon as you would see the correction, that capital will obviously rotate into some other assets and not rotate into the correlated assets. I mean, not rotate into equities that are already trading around its all time high. It will actually rotate into the assets that are going to be considered cheap at that moment. And what do you think is going to be cheap at that moment? Obviously, Bitcoin and obviously other risk assets. And I believe Bitcoin is definitely going to be the best possible choice. It's not like you would see institutions allocating 40% of 40% of their portfolios towards Bitcoin. Definitely that's not going to happen. Even 3 to 4% is going to be more than enough. So yeah, I believe that in the next 3 to 6 months, gold will just continue to rip off. Same is the case with other precious metals also. Bitcoin will continue to chop around the same price levels. Bitcoin will continue to go down. And you are definitely going to see a 2020 style major move, major downside move on the Bitcoin chart, probably a 30 to 40% move. I'm telling you that keep the number of 50,000 to 40,000, 40,000 to $50,000 number in your mind. That's where I would be interested in buying Bitcoin. If it starts breaking below $75,000 price level, I don't really think that you will, or you should really be calling it a bear market. If that happens, all of this will happen in the next 6 to 7 months. So probably in the Q3 or probably by the end of Q2, you will start to see, this transition from gold into Bitcoin. Where should I DCA pendle? I long at $2. Okay. Um, this cannot be predicted. Coming from Sherlock is him hiding the fact that he's a time traveler. Oh, I wish I was. Okay, Sherlock, do you think will rebound from its current drawdown? I'm looking at 59-cent support, but given your market sentiment, it might be a good idea to just not. So I was just reading this article about ASTER, supposedly the hyper hyper liquid killer. Uh, and let me see if I still have that tweet with me. I actually tried to bookmark. Um, so it was basically about CZ, that tweet. I would share that tweet with you. It's actually a good read for all of you. It would basically, it was basically someone sharing the complete timeline of how CZ has dumped all of his tokens. I mean, look at the chart for ASTR. It's probably down almost 90% ever since he started shelling the coin. Yeah, look at the all-time highs, and it's down almost 74%. So, whenever we have any big parties shilling a coin, that's when usually I get a little bit skeptical. I literally have said this quite a few times in the past as well in my live streams that do not invest in this coin. No matter how much it is being shelled to you, when you have the honor of an exchange, when you have the founder of the biggest crypto exchange in the market publicly saying that I just bought ASTR with with my own money worth $2 million. I just did DCA at this price level. I just did DCA at this price level. That's when you need to be extremely careful. That's classic shilling behavior. And they are probably just, and soon after that, you will see a 10 to 15% candle on the price chart. That's when you need to be a little bit careful because this has not really done anything so far. price has constantly been going down. And I was just looking at a few days ago, I was just looking at the fundamentals of the project. I was just looking at the supply dynamics and everything. If Binance is not selling on the sidelines, then who exactly is selling ASTER? And if no one really is selling, then why exactly is the price for this coin going down? So it definitely means that a major party is trying to bail out their positions, and it's probably 𝗍𝗍. It's probably Binance themselves. So that's why you need to be a little bit careful when you see these big parties shilling a token, and have publicly warned everyone not to invest in this coin. I have publicly warned everyone, quite a few times in the past as well, even when it was trading around $1.50. So I'm definitely not in favor of doing DCA. But yeah, if you want just uh, a point of view, if you want just an opinion about what's happening on the price chart, then first of all, on the daily time frame chart, you can clearly see that even if the second peak is a little bit lower in comparison to the first peak, there was definitely a double top present on the price chart. Then you have this neckline, then you have price retesting the neckline, then you have price just continuing to create these lower lows or lower highs. So if I just draw the SR levels for you, let's see where the next support for ASTER is. So this is where the all-time high is, sorry, all-time low is. And then probably you have, even if I just forget about this one, probably you have a resistance at this level also. Yep. So you have a clear resistance on the 4-hour time frame chart. Yeah, this is what I'm talking about. So basically you have no change of character, you have no major move upside, and if I'm not wrong, there is also this trend line. No, you cannot really draw the trend line because the first, second, we do not have the third one. If we have an immediate recovery towards upside, then you would probably say that there is a trend line, ascending trend line present in the price chart. But the more important part here is that we have this major deviation. Okay. So during the last few days, I have been constantly saying this in my updates that the reason why I'm not relying on deviations to take long positions, okay? Okay, please pay attention to this carefully. What I'm trying to say here, the reason why I'm not relying on deviations, the reason why I'm not relying on breakouts is because 90% of these charts, they're still trading below their dynamic levels. And this is exactly what I'm talking about. If you are not paying attention to the dynamic levels, if you do not have the right dynamic levels present on your chart, you would draw the support, you would say that, look, this is a breakout candle. Even if you would show me this chart and you would ask me to make the decisions based on just the SR levels, my first thought would be, let's take a long position, the breakout candle, the first 4H candle, let's take a long position, place a stop loss here, and then probably just target this next resistance. It's a decent 2 to 3 risk to reward ratio trade that I'm getting. But something which I have been saying for the last few days is that the problem is, for most of these charts, the problem is that price is trading below the dynamic levels. So even if price is giving you a break above resistance, the reason why we did not execute any long positions during the last few days is because of these dynamic levels. And this blue line here is the yearly VWAP. This green line here is the 4H 200 period exponential moving average, and you can clearly see that price never ever recovered above these levels. Price was never able to go beyond these levels, and I can show you multiple examples. Even if it was trading above the quarterly VWAP and the 112 period exponential moving average, it perfectly retested the 4H 200 period exponential moving average. This was a retest of 4H 200 period exponential moving average, big move downside. This is the retest of 4H 200 period exponential moving average, big move downside is happening. So for that reason, you always need to pay attention to the dynamic levels as well. And that's why the context is important. That's why sometimes it's much better to just stay on the sidelines and not take any random positions. Okay, this is what I have been emphasizing on last few days when everybody's saying that, why are we not executing any positions? 2 days ago, the idea was to execute long positions because Bitcoin looked good, because altcoins looked good, because most of them were breaking above the resistance levels, because Bitcoin dominance was starting to look weak. And now, just after 48 hours, you look at the Bitcoin dominance chart, which is now once again back above that $4,700 price levels. Most of these charts again gave you a fake out. They were not able to break above these dynamic levels. So you are basically in the same situation. If you had placed the trade if you had placed a long trade just 2 days ago, or let's just say that if we had kept the arrow long trade open, you can imagine what would have happened. So that's why it's difficult to trade the choppy markets. It's difficult to trade the market which is just moving in a narrow tight range. It's not an easy task, especially if you are focusing, especially if you're paying attention to the altcoins, because they would continue to give you these fake outs. You are looking at 450 plus pairs at the same time, and that's why people often give this argument that one asset, one time frame, this is, and sometimes one session also, this is what this is what exactly your approach should be. But when you are looking at 450 plus pairs, it's natural that most of these pairs would give you these fake outs, and ultimately you would end up taking the wrong positions. And you can imagine that even if you would just select 3 pairs, you would end up hitting 3 stop losses in a row. Out of these 450 pairs, you just selected 3 good ones, and if all 3 of those positions hit stop loss, now you have 3 L's in a row. So that's why it's a little bit difficult, especially in these kind of markets when price just continues to trade in a range. So regarding ASTER, I would say that if you're looking to do DCA, wait for price to not only break above this resistance level. The reason why the first week of January was so good for the altcoin market was not just because Bitcoin had a break above the $90,000 resistance level, but at the same time, Bitcoin was going down, had a major rejection at $4,700 price level. But more importantly, we had most of these coins immediately reclaiming the dynamic levels. But if you take a look at the things that have happened in the last few days, even if we had some moves upside, even if we had a small move upside on some of these altcoin charts, we did not have any break above these dynamic levels. Even if I show you the chart for Arrow, I actually made the compromise. When I was taking the long position on Arrow, I actually made the compromise. At that time, the dynamic level was present almost 10% above the market price, 10% above the price where we took our entry on Arrow long position. So my initial thought was that if Arrow actually makes a move here, at least it would go up 10% before it hits a major resistance in the form of 1-day 12-period exponential moving average. So with this Arrow long position also, you realize that it was just a compromise that we were making. To be honest, there is actually not a single good long position that I was able to spot during the last 2 to 3 weeks. In the first week, again, the situation was very different, just because these coins, they were immediately able to recover beyond these dynamic levels. If you compare it with this move on 2nd of January, how many of you remember on 2nd of January, we were able to catch this move on Arrow, almost a 30 to 40% move on Arrow when this breakout happened. Now compare this breakout with this breakout, okay, with this retest with this breakout. In the case of this breakout, you can see that we took a long position exactly here. Price immediately trading above the 1-day 12-period exponential moving average, the quarterly VWAP, the ELD VWAP. It gave a small retest, and then it had this major move upside, and it was also trading above the 4-hour resistance, which basically means that it had already flipped this resistance into support. And there is this other thing that whenever you see these dynamic levels getting close to each other, whenever you see these dynamic levels compressing, whenever you see these dynamic levels kind of crossing each other or trying to merge into each other, that's when you know that a big move towards upside is going to happen. And in this case, you can see that we took the long position here, and the 4H200 period exponential moving average was almost 20% above the market price, which basically means that there was actually a big difference between these two resistance levels. There was actually a big difference between these two levels. This is your support, this is your resistance. So you could have easily caught a 20% move upside, and we ended up having a 40 to 50% move on the Arrow chart. But this situation, it's quite different. We took the long position here. Every single dynamic level is actually trading above the price, right? This is 1-day 12-period exponential moving average. This is your quarterly VWAP. This is the ELD VWAP. This is your 4H200 period exponential moving average. So I'm honestly telling you that me and my team, we are constantly looking at the chart. We were constantly scanning these charts. We have been constantly doing so for the last 2 to 3 weeks, and we were not able to spot a single good setup. And for this setup which I gave to you guys, that was still a compromise because we did not have any single, and in fact I've mentioned this while I was sharing the trade also, that there is not even a single confluence present on this chart apart from the fact that we have a retest happening. And another thing, I mainly call myself a retest trader and not a breakout trader. But during the last 2 years or so, I have been constantly saying this thing that the breakout trades are far more profitable in comparison to the retest trades, because by the time you wait for the retest, by the time you take the retest trade, things already would have changed a lot. Okay, and this is the best possible example right in front of you in the chart that the breakout was the best trade. But if you're not a breakout trader and you would just continue to wait for the retest trade, then this is exactly what you're going to get. You would probably just be able to catch a small upside move. So the situation in the bull market is actually a little bit different in comparison to the bear market. In the bear market, you may get to see successful retest trades, but during the bear market, it's actually a good idea to go with the breakout trade. I hope it makes sense. So regarding the ASTER chart, this is what you need to wait for. You need to first wait for price to not only break above this resistance level, break above the 68 cents price level, but at the same time, you need to wait for price to break above the dynamic levels also. This is my explanation in terms of what's happening on the price chart. I already gave you the explanation in terms of the fundamentals also. I absolutely do not like the fact that, I mean, this would be the last asset that I would like to invest in. Okay. Even if you would ask me to invest in a shit coin, a total shit coin with, let's suppose, you know, less than $20,000 market cap, I would be willing to do so. But not in this coin, considering that it is constantly being shilled by 𝗖𝗍. Okay. It's actually a pattern. I wish I had that post, that article, but if I find it, then I would share it with you in premium chat in Discord. But yeah, it was actually a good read, basically explaining the complete timeline of how this coin has been shilled during the last 4 to 5 months and how it's a classic pump and dump pattern. Where should I DCA Pendle? I long at $2. Okay, let's take a look at the chart for Pendle. I guess this one was also giving a few fake outs. I'm not sure what's happening with. Okay, so you are asking where should you be doing the DCA into your position, and your average entry is, yeah, this is what I'm talking about. You see, I said this chart gives a lot of fake outs. So you actually have a small support here, and you are looking to do DCA into your position, and your average price is $2. Okay, so your average price is quite high at this point, and I believe there is a trend line also. So I would not recommend, if you wish to do DCA, if you really want to do DCA, if you really want to save your position, then this is your last chance. If it has to bounce, then it needs to bounce here. If it can actually give an upside move, then it needs to happen here, because from what I can see is that it actually has this big trend line present on the chart, and it's probably visible on the daily time frame chart as well. Yes, exactly. Even if I just ignore this support, there is a big ascending trend line on the daily time frame chart, which basically means that there is tons of liquidity sitting below this trend line. And once we start having a big break towards downside, it will in no time go all the way down to $1.65. It's right now sitting at $1.88. So if you wish to do DCA into your position, then this is your last chance to do so, because obviously Bitcoin dominance is sitting at resistance. Bitcoin is sitting at 84.5k support. I believe, yes, it's still sitting at 84.5k support. And then Pendle also is sitting at support. It has already bounced at this level quite a few times in the past. So this is probably your last chance to do DC into this position. Otherwise, you can just have your stop loss somewhere around these levels. I would not suggest waiting for $1.60. You said that this is your stop loss. Why would you be placing your stop loss at $1.60 when price is sitting at a support? If it breaks below the support, then there is no point staying in that position. Always choose your invalidation point carefully. Never ever set an arbitrary number. I love when Sherlock leans forward and starts talking into my left ear. Yeah, I do that quite a lot. So, when are you going to share TVEM bands indicator again? Oh, that script is publicly available. If you would like to have access to the TVEM bands, all you need to do, and by the way, guys, we are working on something really important. Uh, so the first thing, we are launching the Forex community very soon. This is what all of you have been requesting for quite some time. So the good news is that the Forex community, we have already started looking for the analysts. We have already started making all the preparations and everything. The Forex community, it's going to be absolutely free for all of you, for everyone. And you wouldn't really have to pay for anything. And we plan to keep it free forever. Okay, this is the important part. We plan to keep it forever. Obviously, there is going to be something like a sign up link or something like that, but we plan to keep it free forever. And the reason why we are doing so is because the crypto market has just been a little bit choppy. So I thought it would be a good idea to step in the Forex market as well, and hire some good analysts, and have some exposure for the Forex market also. It's going to be absolutely free for all of you, but for the people who are already a part of the crypto community, I mean, even if you are not a paying member, all you have to do is just be in the Discord server, keep an eye on the announcements and everything. We are launching the Forex server very soon. Again, it's just going to be absolutely free for all of you. So yeah, this is what we're gonna do. And the other important announcement was that uh, in the next 2 or 3 days, I will be sharing a script with you guys. I plan to do it the actual way. Instead of just sharing the script, I'm going to launch it on TradingView. You will be able to access it using the indicators panel on TradingView. My last two scripts were removed from TradingView for some reason. I don't know exactly what conditions you have to satisfy. Every single time they would, after a few months, remove the script saying that this is not a new idea, you need to come up with something which is extremely unique. I mean, it makes absolutely no sense to me. Their moderators would just remove the script saying that this is not exactly a new idea, you have just been playing around with different averages and all those things, you just need to come up with some new idea. And only then we would keep the script online. And for that reason, every now and then I have to just share with you guys the script instead of giving you direct access to the indicator. And believe me, giving access to the script is far more difficult. I mean, everyone would have to just join the Discord, open a support ticket, and then get access to the script. And providing access through TradingView is far more easier for me. But because they remove it every now and then, so it just becomes a little bit difficult. This time, what I'm gonna do is that for all those people who do not have, obviously, a premium subscription of TradingView, you can only probably apply 2 or 3 indicators on your price chart. So all of these different indicators which I personally use. Okay, so I have MTF 200 EMA, then I have anchored VWAP, then I have MP VWAP, which is basically the rolling VWAP. Then I have these two VWAPs, which are basically not rolling VWAPs. These are the VWAPs with breaks. Then I have the spaceman key BTC levels. This is not an indicator which belongs to me, but multi-time frame exponential moving average, this is another one which I created, which basically has all of these different time frames and all of these moving averages in one place. Then yearly VWAP TVM bands, and this one also is not something which belongs to me. But yeah, my basically plan is to just create an indicator having all of these multiple options, just one indicator having all of these different moving averages, all of these different dynamic levels, all the TVEM bands. I mean, everything just included in one indicator, everything included in just one place, which you will be able to apply directly on your price chart, which you will be able to access using the indicators panel in TradingView. It's just going to be a little bit difficult. It will take some time, but in the next 2 or 3 days, I plan to launch it on TradingView. So make sure that, again, you are in the Discord server. This is one thing that you can do. All you have to do is just click the link in the description of this video and join the Discord server. Or if you would like to have access to the premium signals and everything, we have few really exciting things in the Discord server that we recently started. The market updates being one thing, and then we have also started this thing called Pump and Dump Intel, in which basically one of our trading coaches, they regularly share the news about coins that what coin, what's the reason that this coin had this big move upside, what's the reason that this coin had this big move downside. And I was just recently referring this thing to my members in the market updates channel also, that as soon as you would start tracking the information presented in that channel, you would realize that none of these moves are actually random. Okay, I mean, with Bitcoin, it could be a little bit difficult to predict, but if you take a look at every single piece of information being shared in that channel, you would realize that even if there is a small 10% move upside on any of these price charts, I'm talking about 450 plus pairs, which by the way, this guy is scanning every single day. He's keeping an eye on everything that pumps, everything that dumps, and then he researches into it, and then he shares the complete information with you. Then that what exactly is the reason that this coin had upside move or downside move today when probably the rest of the market was going in the opposite direction. So you realize that none of these moves are actually random, and everything in the market actually happens for a reason. Obviously, it's not possible to have, as an individual, it's not possible for you to keep track of all of this information. And this is the reason why we created this channel, in which someone is manually researching into all of this information and then sharing the actual alpha with you. So we are going to launch a few other exciting things as well. It's not really going to be limited to signals. It's also going to be something related to education. It's also going to be something related to forex. And as I already mentioned, that the access to forex server is going to be absolutely free for all of you. No catch. You would not really have to pay for anything, and we plan to keep it free forever. And we would try our best to have the best possible analysts in the Discord server. Wait, where can I find TVM bands publicly? I cannot find it indicator in the search bar. As I already mentioned, that the indicator has been removed from TradingView. So you need to join the Discord server, and then you need to just open a support ticket. You don't really have to pay for anything. Just join the Discord server, link in the description of this video, and then open a support ticket, and then ask one of the support staff members to share the script with you. You would copy paste that script in your TradingView and you can have access to it. Can you maybe take a look at Dodge also? Your indicator may be the secret sauce. Yup. Actually, we are planning to create some secret sauce as well. I'll be honest with you. We're actually, we, you know, we have been trying to do so since last 1 year or so. One member of our team has been working on this thing since the last, I would say, 1 or 2 years. And he actually was able to build something which was quite efficient. There were a few things in that indicator which did not work properly. I mean, it's not a magic indicator, it's not generating any buy and sell signals for you, but we are basically trying to create something which is to some extent uh, able to predict the future. Okay, by predicting future, I do not mean to say something magical. I mean to say forecasting the future based on the best possible information available, right? In terms of price charts. So this indicator will utilize the best possible information available um, you know in a particular time, and then utilize that information to forecast the future. Not exactly predict the future, predicting is not the right word, but actually forecast the future. And by the way, about Pendle, you need to DC at this price level, set the stop loss below this low. If it starts breaking below this level, not only it will be breaking below this support, but it will also be breaking below this trend line. And that's when you don't really want to stay in this position for a long time, believe me. Okay, so what's the next chart that we are looking at? Dodge. So Dodge had a nice move upside, just like most of these other meme coins as well, in the first week of January. And then I believe a successful retest also happened. Yeah, this was the breakout trade on Dogecoin. And then this was the retest trade also. The retest trade was also successful. And now you can see that Dodge is basically trading back below this level. So, this is going to be the short position for Dodge, in my opinion. If you're planning to take the short position, then this is a good shot. Let's just delete this resistance and let's just only focus on this one. I'm not sure about the support because I don't even want to look at the support, honestly, because I'm not planning to take any long position on any of these altcoins. But on Dogecoin, actually, you can take a short position if this retest happens. This you can consider small retest, not exactly a proper retest, but if the retest happens, this is going to be my short trigger for Dogecoin. I mean, you guys should really be happy that at least we did not take any stupid long position. Okay. While everyone else is trying to long Bitcoin, while everyone else is still trying to open random positions on altcoins, I tried my best. Okay. This is one of the things that I did last few days, in which I tried my best not to open any stupid long position which did not make sense to me, even though Bitcoin dominance was still sitting at resistance. Now I would be interested in doing so, because Bitcoin dominance is still sitting at resistance. It just created this big wick, and Bitcoin is also sitting at support. Now we need to see if Bitcoin actually creates a bottom here or not. Okay, this is the important part, because Bitcoin needs to show some signs of life here, which, by the way, it's not doing so at this moment. It just continues to go down. Our bad that we closed this short position. We pulled out the limits for this short position. We should have actually kept the position open. Same is the case with 𝗏 also, to some extent. It was just giving the retest. Okay, someone was asking me the other day that what's the reason that you are placing the limits around here on 𝗏. The reason obviously was, or the reason why I planned to open a short position on 𝗏, was first because it had a break below this level, and then if you would draw the dynamic levels for this small wave, you would realize that 𝗏 had a perfect rejection at 61865 fib level. So it was making sense to me that 𝗏 is probably going to have a big move downside. Bear market, dan so Luca is saying bear market dynamics are basically bull market like mechanics in the opposite way. How are you planning on trading the bear market? Do you make as much as you did in the bull for just short term trades? I'll be honest with you. The peak of the bear market, we were definitely really successful, because at that, the only kind of market which is, I would say, difficult for me personally to trade is the ranging market. It's far more easier. Every time I get to see these videos with people giving whole lectures on how you should be trading the bear market, what exactly are you going to do in the bear market. I mean, if you are an investor, long-term investor, then it could be a little bit of an issue for you on how to trade a bear market. But if you are a day trader, if you are a swing trader, then it makes no sense for you to have any kind of confusion on this thing. It makes no sense for you if you're worrying about that, how I'm going to make money in the bear market, because it's just going to be the same thing. Okay, this is the bear market chart, this is the bull market chart, just in the opposite direction. You have to draw the same support, resistance, trend lines, chart patterns, moving averages, TVM bands, and VWAP. You don't really have to do anything. So 2022-23 we were really good. 24-25 also really good. These last 2 months have just been a little bit shaky. Again, the main reason why, because we have this consolidation phase going on. And just like I explained to you, because I'm a swing trader, so whenever price starts moving in a range, that's when things get a little bit tricky for me. Because that's when you don't really have any clear direction about the market. If Bitcoin starts losing 84.6K, I would know that, okay, Bitcoin just lost an important support. I should be taking short positions. I should be building short positions, because Bitcoin just lost an important support and now it's going down to, let's say, 78K, 75K. But if you have Bitcoin moving between 90,000 and 85,000 for 4 months consecutively, that's when things get a little bit confusing. That's when things get a little bit rough. And I mean, it's kind of obvious. I hope it makes sense, Luca. Okay, guys, make sure to like the live stream and subscribe to the YouTube channel also. The channel is literally stuck at 2,800 subscribers since the last 2 to 3 months. And by the way, I would really appreciate if all of you would just follow me on Twitter as well, and make sure to like all the Twitter tweets. Make sure to engage with tweets as well. As I mentioned already, instead of just sharing the market updates, I've started this series where I am constantly sharing useful information, useful in a long term, in which I have been explaining the strategies. For example, this tweet, the pinned tweet, is sharing really useful information explaining about all of these different indices. The second one explaining about the correlation between gold and Bitcoin. The third one basically explaining the proper mechanics of backtesting, that how to properly do a backtest, how many trades you need to backtest before reaching a conclusion as to what exactly your win rate for that strategy is, what kind of markets you need to trade, then funding plus OI playbook, then how you have to trade funding rates and open interest together, then a talk about 0.786 or 0.618 fib levels, then a talk about funding arbitrage, then about open interest, then about times. So, really useful information is being shared. I have decided that I will be sharing the strategies also. I will be sharing information related to backtesting also. I will be sharing information related to other important assets as well, other important financial assets also. So really useful information will be shared on my Twitter account, not just simple market updates. Yes, I will be occasionally sharing market updates on Twitter account, but most of these updates are going to be related to strategies and some really useful information which you guys would definitely like. So make sure that you're following the Twitter account 𝗨𝗏𝗏 and make sure that you're engaging with tweets as well. Let me know your opinions in the reply section, in the comment section about the information being shared, because sometimes the information is conflicting to what we actually believe in. For example, this gold and Bitcoin thing, people usually term it as digital gold, but I have explained here a totally different opinion, a completely different opinion, which may not really make sense for most people. So that's why it's important to just state your opinion as well. And I've always said this thing, that this is the best possible way that you can learn, just by having access to the reliable information. I want to join Foxian. Do you do payment plans? Yes, you can join Foxian, and then you can, if you wish to join it directly, then all you have to do is just go on our website, foxian.org. This is a website. Scroll down and go to the payment options. And by the way, we accept card payments as well. I'm sorry. By the way, we accept card payments as well. We accept crypto as well. Probably we are one of the very few communities who have their own payment gateways. You can pay via PayPal, American Express, MasterCard, Stripe. We have all of these different payment gateways available. You can pay via card and then join the Discord server. Or if you have something to discuss related to payment plans, then you can obviously join the Discord server first, then open a support ticket, discuss it with support staff, and they would be more than happy to assist you. Okay, guys, I guess that's it for today. I hope you guys enjoyed the live stream. Again, don't forget to like the live stream. Don't forget to subscribe to the YouTube channel. And I will see you guys next week. Have a great week ahead, and make sure that you are paying attention to the information being shared. And now all of the market updates, or most of the market updates, are actually being shared in the Discord server. So if you would like to know what's happening in the market, if you would like to have a live overview of what's happening in the markets, then you should definitely be joining the Discord server. The link you can find in the description of this video. And it's not really going to be just about the signals, it's definitely going to be a lot more than that. Information being shared in the Discord server is really valuable. And then we have other analysts also sharing their trade calls. So join the Discord server, find the link in the description of this video. See you guys next week. Make sure to keep an eye on the announcement channel as well. We will be sharing the information related to Forex server. We will be sharing the information related to the indicators that I am personally working on. A lot of things are being done in the background, and it's just going to be a really exciting journey for everyone. Thank you so much for joining in. Take care and have a great week ahead. Thank you.